If you're thinking about getting invested in the stock market and you haven't gotten started yet, this is the video for you. Now, this isn't the video to tell you what stocks you should buy, how to make a lot of money from the stock market. None of that. This video is for you. Why is it for you? Because I started this journey back in 2015, November 13th, and I've been buying consistently in the stock market to show you guys that hey, you do not need a lot of money to get started. You just need time, patience, and discipline. So I'm showing you guys here my graph within the month, as you guys can see how I've been doing. Um, it's been ups, downs, but that's going to be the result when you are first starting out. But something I want to share with you guys is when you see this graph, and I'm dealing with a smaller amount, the ranges, the ups and downs aren't as like impactful. Versus if I started with a lot of money, look at these ups and downs. My emotions, my psychology, a lot of things would be under pressure. So it's best that, hey, we practice how to manage a smaller amount of money. That way, when we have enough practice, when we get to the bigger amount of money, we know how to handle these situations. So in this video, what you're going to get if you're thinking about investing and you want to get into this, I'm going to share some of the things that I have done that you can take and implement it or change it into your unique strategy or style. But if you're wanting to get started, please, I need you to download. It could be Robinhood, it could be Webull. I like Robinhood. I like Robinhood for the new beginner investor, the new beginner investor that wants to get started in the stock market. Why? Because I remember when I got started in the stock market, it used to cost so much just to buy stocks. Like the fees to buy stocks was a lot. Like it was like I remember at one point it used to be like $7 or $9. Then other little brokers came out and they started like challenging the fees. It used to be like $5 or whatever just to buy stocks. Now we're buying stocks for like pennies of the dollar. And not only that, you could buy fractional shares. I remember when I got started, if I wanted to have one share of Bank of America in today's price, it would be $46.77. And that would be the only way for me to get in is to buy one share. But now I can buy fractional shares. Like as you guys can see here, I have $22 worth of Bank of America. And I have a dividend coming in March 27th. So I still can be a market participant, still receive the benefits, and like there's no excuses. I'm not barred to the excuses that what there used to be the entries. So my name is Ali Malvis, and if you guys haven't watched my previous videos, I recommend you taking time and watching the other videos so you can understand how I got here. This video, as you guys can see, the account is at $5,000, but I don't want you guys to focus on the amount. This is still for the people that have $0 to $500. Even if you have 5K, this video is still for you. Because as you guys can see in my previous videos, I have the money, but I'm not putting everything in just stocks immediately in one day. I'm still going through the progression. I'm still, buying stocks. I'm still being active. So sit back, watch the videos, understand the content. That way, the future videos that come, you guys aren't lost. So nonetheless, I'm gonna get started because today's a red day. We're just red all over the place. I have a few plays that I'm gonna go over at the end of the video with you guys. But for now, we're gonna buy some fractional shares. We're gonna buy some fractional shares. We got some Bank of America. We're gonna get $1 worth. We could have got some cheaper when the market opened. Jesus, we could have got cheaper, but it's all good. We're still getting what, like 42 cents on the dollar. On the dollar, we had some Bank of America. Coca-Cola maybe. I think we're up on Coca-Cola. Yeah, we're up on Coca-Cola. But should I buy? Say, we're gonna wait. Spy, we're definitely getting some spy today. We're definitely getting some spy today. Probably gonna buy $2 worth. Bring down this average a bit more. There we go. And the reason why I like buying into red days, guys, is because there's 252 trading days in a year, right? So let's just say this year has only 52 days where the market closes red. Well, if there's only 52 of those days where the market closes red, that means there's 200 days that the market closes green. So if I buy all those red days, in theory, my profits would be up. Versus a lot of times, what happens is when I was starting my journey, is when the market was red, I was quick to sell. Like I wanted to sell with the market, and that would create like panic and fear and all that stuff. So now on red days, I buy, and on green days, like I don't really sell, but green day is more enticing if you're thinking about getting out of position to sell, right? Right here we got some Microsoft, bro. Microsoft is just steepening. But it's okay. It's okay. It's okay. Boom. It's okay. We got some Microsoft. Netflix is down. We're losing a little bit of gains, but that's okay. Netflix is down. We just got some Microsoft. We're gonna chill on Google. Silver, gold, all the metals are down. It's okay. We're gonna still add a little bit of position. Not too much because eventually I want to get out of these things. Not out of the metals, but I want to get out of the mining. I got the minings of the metals. I don't have the actual metals itself. I actually do have the metals. I want to talk to you guys about that in another video. We're gonna talk about that tomorrow. Talk about that tomorrow. Um, get some of the metals. The metals. Get some of the metals. All right, cool. So we got that. Got some metals. And then last metal would be copper. And then we have some plays to go over with you guys, ladies and gentlemen. We have some plays. So this is the strategy if you have $0 to $500. If you have 2,000 and more, this is the plays that I want to go over with you guys that I was talking about as far as um, the strategies that I've done that I want to talk to you guys. So right now, I am doing a covered call on a stock called Hims and Hers. What is a covered call? First, let me explain this. I have 125 shares of Hims and Hers. My average cost is $24.91. I have 125 shares, and what I agreed to do is to sell 100 shares of Hims and Hers at $23 if the stock is above $23 tomorrow, because tomorrow is expiration. Today's the 19th. Tomorrow's expiration. So if the stock is above $23 at the end of expiration, I am forced to sell my shares because for doing so, they gave me $190 for doing so. So realistically, it's $1.90 per share because it's 100 shares. It's $190. So that's what's going on that side. Now let's say at the end of expiration, Hims or Hers is above $23. I bought it for $24.91 and I gotta sell it for $23.91. So basically, I'm losing $1.91 for every share. So $191. But for here, for selling my shares or putting it up for sale, I'm getting $190. So realistically, if this is above $23, I will be losing only $1. If this is below $23, I get to keep my 100 shares and I get to keep the $190 that was given to me. So right now, I'm just gonna let this thing play out. Hims and Hers definitely had a huge bounce today, so we're definitely gonna see what tomorrow brings. I mean, the market still has a couple hours to do its thing, so we're gonna let that chill out. The next play I did was a uh, credit spread, a call credit spread. These are plays that you can do if you don't have a lot of money and you still want to like have action on a stock. So what I did here is called a vertical spread, a call credit spread, where basically I'm saying, hey, I do not want hims or hers to be in this range. Better yet, I need it to be above below $25. It can get in this range, and we can get as far as like um if it were to like end at $25.02 and $25.03, what would it do? But um that's for another video. So right now what I basically need is hims and hers to be under $25. If it's under $25, the credit that I got was $14. So the risk that I put up, I'm gonna show you guys here. Let's say I wanted a contract right now. I would put in one. I would try to find a price that I can get filled at. Let's just say 0.5. I would get $4.92. I got to pay the fees, and I would put up $50 for collateral. So I put up $50 and I automatically get $4.92. At the end of expiration, if this contract um, ends, I forgot what the actual term is. It just blanked my mind. If this contract goes to zero, basically, I would get my credit, I would get my collateral back, and I get to keep the credit. If this is above $25, let's just say it's $26, I would lose the collateral, but I still get to keep the credit. So in theory, I would only be losing about $46 or $45 and change. So in theory, I'd only be losing $45 and change. Now, what I want to talk about when it comes to these plays and strategies is I got only $14 in credit. I don't want to say only 14 because it's 14 out of a $50 play. So that's more than like what 20%. Like I'm able to get more than 20% on this play. But right now I've gotten 57% of the play. So in theory, this is a good this is good return because it's like what's left more for me to gain. There's only $6 more for me to gain out of the contract, and this thing could shoot up to $25 tomorrow. Like it could easily shoot up to $25 tomorrow. So who knows? So if it shoots up $25 tomorrow, not only I'd be losing the $8 that in potential gains, now I could be losing the contract. So a 57% gain on these contracts would be phenomenal. This is phenomenal. So what I'm going to do here with you guys is actually close out the contract. See if we can close out the contract. Probably close it for 7 because these guys are being greedy. So close it for 7. We close it for 7. So we made 50%. We close it for 7, made 50%. Boom, close. So we're out of that contract. We made $7. And how I like to see it is I invested 50 and I made 7. So I made a little bit more than 10%. And then here I have on the same type of contract with SPY. But this is for a little bit longer time. This is for next week. Next week, what? Monday? Tuesday? So if SPY is at the end of expiration below 659, I get to keep the $81 of credit, and this cost $100 for collateral. So let's say I wanted to get another contract right now. I would get $46 in credit, and it would be a $100 collateral. If at the end of expiration it is below 659, I keep the credit and I keep my collateral. If not, I lose the collateral, but I still keep the credit, which means in theory, I'd be losing like $54, $53. So right now, I'm actually going to close this with you guys. I have another one. I might actually let that one play out and just close. Wait, this one's 649. No, I might. Yeah, I'm gonna close this one, even though I have more time on this one. But we made 18, 16%. So, and the range is pretty high. So let's see if they'll let us fill at 71, 72. No, let's try 71. So we're gonna try 71. See if we can close, get our $100 back, make about $12. Cool. So you made about $12. Probably could have got a better fill, but hey, we made our percentage. We made $12. We spent 100. We used 100 for collateral, and we made 12. So that means I made 12%. This one I'm gonna let play out a little bit. It's kind of being greedy, because tomorrow's spike can go up, and I only have a few days left on this contract. So really, I should be closing this. I'm not even gonna be greedy. There's definitely more money on the table, but also having cash is also a play as well. So where are we at? 46, 81. Let's say 47. Let me go for 47. So 47. I made $34. Boom. So I made $34 plus the other like $7. So $41. And spy plays, and my money is released. They released 200. So now the other play that I have left is this play with Intel. Expires next week. Basically, I need Intel to stay above $40. Stay above $40. Like on paper, it looks like I lose, but in theory, I won this play. So I need Intel to stay, and then yeah, we have hims and hers. We have another credit spread. If they go below $23, but this is for like when 2 weeks. I have two contracts for $50 collateral. Average credit $23, so it's about like what $46 on the plate. And yeah, we just letting time ride. That's why I like when you start small and you're doing these small contracts, because the only other thing to it is letting time ride. So, ladies and gentlemen, thank you guys for watching this video. We have tomorrow, Friday, and then we have next week, and then we just keep on building. We keep on stacking, ladies and gentlemen. As you guys can see in my videos, I don't put too much time in as far as like watching stocks. I'm in and out, in and out. I do my thing. If we're red, we're definitely buying. If we're green, we're waiting, and we just keep it pushing. I don't want to be the person who's watching the markets, the charts for 8 hours a day. And not to say that's bad. You go watch the charts 8 hours a day. I recommend you when you're starting out. But in the long term, it's it's not for everybody. So thank you guys for watching, and we see each other tomorrow.